Not really feeling so well. Good morning, everyone. So, thank you for coming over. Yes, I will explain the buy signals later, but for now, I would like to start the day by just sharing with you what have you guys missed and what kind of structure are we looking at for gold. So first of all, you guys need to understand, I'll address you guys as students, okay? So my students, you guys should understand that we are playing in a monthly zone, which means that the zone that price is currently in right now is so empty. Look at this. What do you have in this monthly zone? You never know what do we have in there, but we might see price being able to push all the way down to 1616. So that's another 400 pips maybe, if price really wants to reject this monthly candle. And if I look at the weekly time frame, what do I have right now is that we still have a valid level of support at 1688, but that support seems like it's just going to be broken. And if weekly push down, you have to expect that price can come all the way down to this lower zone. So I would just, what should I use? Green color, all right. So this is the weekly zone. So that's why I'm saying that the current market where it is right now, it's in a huge monthly zone. So that's why we always have to look at the smaller time frames. We can start looking at the daily time frames. Daily time frame right now, I have identified that this could be a potential area for rejection. Currently, where price is right now, I don't think it's just going to reject and buy all the way up. You still can see like bearish movements coming in the market. So that's looking at the daily. Let's look at the H4. What we have right now is that we don't even have any bullish movement from the H4 yet. So we shouldn't be even thinking of buying yet until the H4 has created a bullish movement. Who are you to be able to tell if the market is going to reverse 100%? You cannot tell that. But what you can do is that look at this. Look at this big push by gold. This is from the H4. So obviously, after big push, we might see consolidation like this, which is what's happening in the market. So if you ask me, by just looking at H4 right now, I really cannot tell you if it's going to be a sell or a buy. But what I know is that if this sell continues, it can continue all the way down to our daily level at 1636 and the next level at 1616. So now let's start looking at the H1. I have marked this orange zone over here. So for those of you guys who are wondering what is this yellow zone? Colorblind guys, too much charts. So what is this yellow zone? So this yellow zone is a potential H1 zone for the buy, which means that H1 needs to close as a bullish candle in this zone. As long as H1 does not close as a bullish candle in this zone, price would still try and push to the downside. Okay, so this is from the H1 time frame. And from the H1 time frame, we can also see that we have seen some sellers waiting for us over here. So these are critical zones for pullbacks to happen. And if it wants to sell, it can sell from that zone. So to be precise, let's go to the M30 time frame. For the M30 time frame, when I look all the way back to there, we cannot even see the data. So we are trading at a place where, if you actually look at this, if I zoom all the way out and look for the data to the left, I cannot even find any data that's available. So that's why we have to only trade based on the smaller time frames, what we see over here. Okay, so far, are you guys clear with how I'm starting? So while giving signals, you are not following. I will answer all the questions later. So later on, we can get all your questions answered. But for now, we're just going to be talking about what are the potential for gold today. Okay, so as I said, M30, we are not in a zone where we don't even know what's happening at the back, if there is any setup for the buys or if there's any setup for the sell. So I would say that this zone where we are in right now is just a potential H1 rejection zone. So let's look at the M15. This is going to be quite interesting because when I was marking the M15 today in the morning, I found that this zone over here, starting from 1670.7 all the way down to 1667.39. that is our 30 pips zone for the M15 time frame. Because if M15, where price was just now, for example, before we talk about this zone, we were here just now, right? Price of gold was around here. So what happened is that we had the M15 sell that managed to push price down, because if this M15 sell is valid, look at this setup over here. It can push price all the way down to at least 1647. So we already have the first setup to push price down. Next, I would wait for price to retrace into the zones of M15, or if it's going to retrace into the zone of M5. So M15 for you guys to be aware of is 1667.44 all the way to 1670.7. So that's the M15 zone that we need to be aware of. So some of you guys would have asked me like, where should I be buying, sir? So for me, if you want to be buying, that should only be buying if there's a huge amount of volume coming into the market. Because if not, the buyings that you get, you would never know if it's going to be buying from here or if it's going to be buying from here. So the best part is just supposed to get the sell from here earlier, but we didn't take that sell because you guys didn't give me that 200 fires on the Zoom, but it's okay. I'm going to explain to you today and what we're going to expect for gold. Okay. So as I said, M15 is still, we are waiting for this zone. And if we're looking at M5 right now, this is the level of support and resistance. So this is the zones for M5. What happened earlier is that price rejected again all the way up, right? And then as soon as price came back down, it created a sell setup over here. When it created a sell setup, there was this buy that was present in gold. So I was just waiting for this buy to be broken. So as you can see, price broke lower and then made a pullback into the zone. And that was the M5 sell. So if some of you guys were selling, it would have been at 30, 40 pips for now. But at any time, price of gold can just reject lower and come back all the way up. So if it actually comes back, first zone for you to be aware of is 1663.9 all the way to 1664.2. So this is your first M5 zone. So let me just write it down so that some of you cannot see, right? 1663.94, 1664.2. Oh, 4.25, sorry. So this is our first M5 level that we need to be aware of. Because if you're asking me if I should be buying from this area, I feel like it's too high risk. Price can just reject lower based on the M5 and M15 setup that we had earlier. Okay, so this is the first M5 zone. And let's just say that price rejects and comes back into the zone. This is where I'll be monitoring for the first sell if price rejects. Let's just say that price breaks above. I would not be taking the sell unless if there's a new setup that is being formed by gold in M5, maybe somewhere around here. Then it will be a new sell setup, not the same setup that I'm going to hold. Okay. If price rejects, which means that price breaks this M5 level, I would expect that price can continue bullish, at least coming into our M15 level. So our M15 level starts at 1667.4 all the way to 1670. So that's a 30 pips range. So even if you enter over there, we have the stop loss of M15 waiting at 1672.81. Because if it wants to reject and respects this M15, this is the last pullback to happen before the drop down to respect that setup. If it actually close below than this. So okay, so this is a very important price. Just monitor this price of 1670.72. And I really hope that price would just make a retracement into the higher zones, because then we would try to get the sell from there. Because to get the buys from here, as I've explained, it's can you guys, hello? Can you guys hear me or not? Because there's someone saying that You cannot hear me. Voice is clear or not? Sorry guys, I had to stop for a while. Okay, since everything is clear, so we just gonna continue, okay? So, so yeah, this is the situation for gold and for the M15 and for the M5. And for the M5, as I said, if it breaks this zone, the next zone is definitely the M5. It's no point to take the sell here when we can wait for the sell higher into the M15 zone. And because if we want to really take the trades, and stop loss is around this zone at 1672.8. Let's look at the amount of stop loss that you have. So let's just say that price retrace all the way up. Okay, from here to here. And then you decide to just, okay, let's take a trade based on the M15 time frame. So M15 time frame, you need to know that, look at this mapping that I've marked out for you. What does it mean? The red zones are where you should be entering. And the blue zone is where the take profit should be all the way down. I know it's a lot of pips, but it is possible to get this crazy amount of pips and holding them. So back to the stop loss. Let's just say that you guys have an entry over here. Calculate your stop loss is only roughly 40 pips. Let's just say 38 pips. But you have to remember that if this setup is a valid setup of a sell, your sell could run from here all the way down of a 216 pips. Sorry, I forgot how to count. So this is the risk to reward ratio that I'll be teaching in the class, in the master class, so that everyone can be holding at least 50 to 150 pips kind of trades. All right. So that's it for today. That's my target for gold. And I'll be waiting for zones. And as long as M1 or even the smaller time frames do not create any buy zones, I might not be taking any buy zones. I might be focusing on the sell in the areas I've stated earlier, but any buy zones would just be based on volume, because the volume that because in trading you can also trade based on volume. For example, over here, for those of you guys who took the signal of the buy yesterday, it went up around 60 to 80 pips. So why did that volume happen? Why did that buy happen? So it was just because of the volume. Price broke the levels before, and it was just on a volume. But the real setup for me that happened was when price came back into the zone. So let's look at this M1. Okay, I'm just gonna have 5 more minutes of your time, okay guys? Just 5 more minutes. Just focus for the next 5 minutes. So this buy that happened when I gave the buy signal over here was just based on the fact that, number one, these levels were broken to the upside, which means that this was our level of resistance and this was our level of support. So obviously for price to break this level and then coming back all the way down and to break this level as well, it needs a lot of effort. So it would not just drop a lot more from this moment. So that's why I just took the first buy around this area, and then price retraced all the way down again. We were floating almost, I don't know, 5 to 10 pips, maximum 10 pips, and then it just flew all the way up. And then in that process, we were still supposed to be focusing on the sell, because look at how crazy the sell was from the whole night. It dropped almost 200-300 pips. So obviously there would not just be a buy straight away. The volume concept for me is just, this is very in basic. In detail, I will share it more along the way. Because right now, I just want to share that the most important thing is to follow the direction. This volume buy that we had to push price all the way up is just a volume surge. But then I should have taken and given you guys the sell over here. We could have gotten the sell over here. It was the same sell setup that I always give you guys. Sell now. When I said sell now, for example, this was the area that I should be selling and be giving you the sell, because this was a better setup comparing to just buying based on volume. So next time, definitely I will monitor more, but everything that we do, so to calculate risk to reward ratio, that's a very good question. I think that we need to have a proper class to elaborate on how to manage risk. But for now, I'll just explain a very simple way to calculate your risk. So let's just say that right now, price fly all the way up. And then we decide at this point, Sejerat just says, sell now, your level of resistance is at this, for example. So the level of resistance is at 1670.13. So you are currently over here. So when you see that the level of resistance is only roughly about 10 pips from the price, so you just make sure that you calculate for around 30 pips of the zone, or you can just follow my stop loss that I always give to you guys. It's slightly big, but I always give you guys instruction to cut loss as well if it breaks our level. Because let's just say that this one retrace, you can still sell. Yes, you still can. As long as price stays below the blue line, which is the level of resistance, you can still sell, because from that moment, price can still drop all the way down. So now we calculate the risk to reward. If you sell over here, for example, we are floating, let's just say you sold 10 cents. When price floats 10 pips, you would be down minus, is it minus $1 or is it minus 10 cents? Sorry guys, I don't even know how to calculate that. Can you guys tell me if it's, for those of you guys who is always trading, okay, so it's $1, right? So for those of you guys who knows, if you're selling 0.1 over here, and if it's a 10 pips cut loss, you would be floating minus $1. Minus $1. And then suddenly over here, Sir Gerard says, price broke that level, please cut your loss. So the max you can lose if you trade 0.1 is maybe $1.5. Correct? So this is the risk, correct, 1.5 max. But if it breaks higher, sometimes it is pushing, then it breaks. Maybe you will cut loss at $2. This is what I see, and this is what I feel like I want to share with you guys. But if this setup is being respected, look at this setup again. This is an M1. Sell. As long as price does not touch our stop loss or does not break that level, it will continue to drop down. And remember, where is our take profit? This is our take profit, the lowest point of it. So hold your trades until we hit take profit, because I want all my students in Gerard to be able to hold your trades of 50 to 100, 200 pips, 300 pips, which I will also let you know all the swing trades that I'm taking, so that everyone in here can swing trade, can intraday, you can even scalp, everything you can do as a trader. Okay, so then this is your risk to reward ratio. If you look at it, you lose, for example, if price respects, you are selling here. But if it drops all the way, your take profit is from roughly 65 pips. So that would be making you around $6 maybe. So this is how you maintain profitability. You increase your wins, you cut your losses, and then from there, you just try to have higher and higher probability of wins. Okay, guys, so don't really want to prolong this whole thing. If you guys have any questions, let's start asking so that we can focus on the next thing. Okay, look at that. Look at gold. It retraced. So now, how do you mark the... yes, H1, there is zone. So H1, I was just marking based on the zones that was available at the back. So when I was using H1, and let me show you guys. So look at this. So these are the zones for H1. Can you see that there's this demand zone that is still being retested, yet to be retested? So that's why I actually marked this yellow zone and waited for price to enter and to close as a bullish movement. And then if it actually closes as a bullish movement, our bias could be on the buys from the H1. But as long as H1 does not close as a bullish movement, so look at it right now. For it to close as a bullish movement, price needs to close above the zone. Do you agree? So I would say that price would try and push all the way up, at least trying to retest 1664 and maybe 1664.13. And then from that moment, it can just rise to break and maybe close below. If it close below, we might have volume coming in to push market down. So that's why it's a very key area for where we have marked earlier at M5. That is the turning point where price can reject or break, because our cut loss is only at M5. Because if M5 enters the zone again and our sell breaks that level, look at our stop loss. From that moment to the highest of M5, look at these two boxes. It is only 25 pips. So if you're only 25 pips in loss, for example, you might be in floating of $2.5 and maximum $3 if you're trading 0.1. But if you hold your trades from that moment, and if it's a valid sell, you might be able to take profit. The first level is, look at this, is at 71 pips of take profit. The second is at 150 pips. Okay, so yeah, this is the current situation for gold. And let's look at it. I'll be monitoring gold and I'll keep you guys updated in the group. Okay, so far that's about it. This is just going to be a daily golden mapping to explain the situation. So if you guys have any questions before I can leave, you can ask now. Mr. Fly! Who is Mr. Fly? Masterclass will be soon, but please, I really need your help, everyone here, to at least bring some friends, because I need more than 300 people for the masterclass. When I straight myself, market goes down. Ganesh, it's normal if you do not know your zones, because you do not know where to cut loss at the right places. You do not know where to hold your take profits, for example. So that's why you always have this feeling. So for now, we have almost, I think, 200 to 300 registration. We need to really wait for it to reach to 1,000. I need 1,000 people, guys, because 1,000, we can create an army, and every day we can zoom and wait for zones together and trade together while giving signals, right? Because for me, if I want to be really dedicating my time, I feel like I want 1,000 people. So try and help me out get that. I don't know how you guys can help me out, but just do your part. I'm doing my best to teach you and guide you. I mean, I don't know who else out there is like spending their time, and I'm not charging any single money from you. It's just free. And I just want you guys to support me in terms of like trading under my broker, which is not my broker, but it's under the link. If I'm the broker owner, I wouldn't be here. I'll be in Cyprus or maybe on a yacht. So guys, again, thank you so much for listening. We're gonna end the session here. I'll do the Zoom again soon. Hopefully I get to speak to you guys soon. And I'll update on the M5 what's happening in the zone. And if this zone breaks, remember we have the M15 above. Thank you guys.